Hello traders, Gary Wagner here. It is 12:45 in Honolulu, 5:45 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 7th day of February 2025, and this is the evening report for gold and silver, our weekend review. Gold continues its impressive run with the April futures contract currently fixed at $2,887.60, a net gain of $10.90 today, and a net gain of $52.60 on the week. This marks the sixth consecutive week of gains for the precious metals, dating back to December 30th. Historically speaking, when we look at the major rallies that have occurred since October 2009, each subsequent rally had a steeper climb, with the rally in 2009 having an angle of 60.38 degrees. The rally in 2017, 63.43 degrees. And this most recent rally, 66.14. Each of these rallies has had a steeper climb than the previous rally. The other notable factor is in the first two rallies, the correction that followed has lessened by roughly half. In other words, when gold topped off at $1,900, it declined to approximately $1,000. That is a decline of 44.88%. On the rally of 2017, the decline was much shallower, declining by 21.23%. One takeaway is that on each major rally in 2009 and 2017, as well as our current rally, saw gold prices rise at roughly the same tact or angle, with each following correction being shallower than the previous one. But the biggest takeaway from this long-term study of gold is not so much how gold has increased in value. It's the fact that when you pair it against the dollar, gold has had relatively the same buying power, whereas fiat currency, the US dollar, has diminishing buying power week after week, month after month, and year after year. So while I think the current rally is possibly close to a short-term top and the beginning of some price correction, that correction will be short-lived, possibly shallower than the previous ones that we've talked about, and then return to its upward momentum, gaining value because it's paired against the dollar, which intrinsically will have less buying power next year and the year after, whereas gold will have a stable buying power year after year.
Unlike gold, silver ended the week slightly lower than it started, closing out this week at $32.18. That's about 5 cents lower than its close last Friday. Throughout the past 6 weeks, we do see a bullish trend emerging with 4 higher lows and 3 higher highs. We had seen gains in silver this entire week until today, when silver closed down by approximately 1.5%. With gold reaching new record highs several times this week, when is silver going to react to the same bullish news that gold is reacting to? If we switch this to a line chart and we overlay gold, silver was actually outperforming gold up until 2025. At that point, gold took off and left silver in the dust. I think silver's time to shine may be coming up really soon. In the same breakout that took silver above this descending channel, we also saw silver break above its 3 major moving averages, as well as the 20-day exponential moving average, while at the same time forming a 3 white soldiers pattern, which is a very strong bullish continuation pattern. The last time that silver broke above these 3 major moving averages, it quickly ascended to a multi-year high. In fact, after that breakout, silver would go on to gain another $5 plus. A similar move that occurred to the last breakout above these major moving averages would bring us to a new multi-year high over 3650.
This has been Gary Wagner
And Joseph Wagner.
wishing you, as always, good trading.
We'll catch you next Friday for our next weekend review.